Well, let's talk more about inflation figures that have just trickled in. And I'm being joined via Skype by Mr. Johnson Chukwu, who's the CEO of Cowry Asset Management Limited. Thank you so much, Mr. Johnson. Immediately this figure came in. I was excited that we had a discussion for today. But 20.77%, it's like it's not looking too bad. Many thought it was going to be higher than this.
Well, if you say it's not looking too bad, I mean, you have to look at the fact that this is multiple years of the highest rate we've seen in multiple years. And remember, there's what we call base effect. So if the base is already high, then the subsequent figures may not be, the difference may not be that much. But at 20.77% is quite high for a Nigerian economy. And most importantly, if you consider that food inflation came at a rate of 23.34%, and most average households, their basic consumption are food, and they are most affected by increase in food prices. So if you consider those factors, you will realize that even at 20.77%, the inflation rate in the month of September was quite high.
So now looking at some of the other, what is ascribed to this, and many still talk about the issues that we've addressed before now, that the issues with food price, and the new one is flooding. What effect do you think this would have moving on with inflation? Because it's supposed to be harvest season in some cases, and if we're having this level of flooding, what effect would it have in its entirety across inflation and the economy?
Well, let me make this clear. The inflation figure we saw in September in the first place did not factor in, did not reflect the flooding, because the flooding happened subsequently. But given the kind of level of flooding we saw, given the fact that several rice farming belts had their farms destroyed, cassava, yam, and other tuber may also have perished during the flooding period. During this flooding, you are going to realize that in the coming months, food inflation will increase materially beyond where it is today, because after the lag effect, because by the time you get to months like November, when the food that have been destroyed should be hitting the market, or by December, when rice harvest would have occurred and ordinary rice should have come to the market, you're going to get those produce in the market. You're going to see a steep increase in food inflation. And this will obviously have a direct impact on overall all-item inflation. And the standard of living of Nigeria will worsen. You remember that Nigeria does not permit importation of rice. And rice is among the most highly consumed staple food on Nigerian household tables. So the impact of this is going to be quite negative on average households in the country. But most importantly, we're going to see this reflected in food inflation and overall all-item inflation in coming months. Probably the impact will begin to manifest in inflation figures from the month of November through December, maybe to the month of the early first quarter of next year.
The disruption in supply and, of course, the increase in import costs due to the persistent currency depreciation is something that I want us to also talk about, because one way or the other, this would affect increase in cost of production. How well are we doing? We're moving towards December, and many will say manufacturers need to be producing, to be able to meet up demands at that time. How will all of this affect our monthly figures from the NBS?
If you look at the segment of that inflation rate that actually is impacted by what you just talked about, is what they call the core inflation, which is all-item inflation excluding the volatile food items. And the month of September, core inflation came at the rate of 17.6%. Part of the inflationary pressure we're having on all items, excluding volatile food items, is the pass-through effect of depreciation of the local currency. Beyond the fact that international prices of a lot of commodities have increased, particularly energy commodities, they also have to deal with the pass-through effect of the fact that Naira is depreciating. And average importers obviously use the parallel market rate as a basis for converting their import. So you're going to see this worsen. As long as Naira continues to be under pressure, and as long as Naira continues to give way to dollar in terms of exchange rates, the pass-through effect of that will reflect in core inflation. And if you look at core inflation for September, you realize the pressures came from the cost of transportation, cost of gas, price of other solid fuel and liquid fuel. And this, if you consider that also, that OPEC and OPEC Plus only came up with a decision to reduce crude production by 2 million barrels. So the impact of that will be that oil price will remain elevated, and that will have a direct impact on the cost and landing cost of particularly AGO. And remember also that AGO is the major fuel source for manufacturing sector. So the manufacturers face double whammy. One, assessing effects and importing their raw materials at highly exorbitant exchange rates, and also having to pay for energy supply sources, for energy supply, particularly diesel, at such elevated prices. So this will lead to increase in cost of goods produced and possibly increase in a reduction in level of productivity of production. And you don't rely on the fact that you also have a negative impact on employment.
And it just concluded the IMF meeting. Yes, a lot of discussions are on the sidelines of the IMF and World Bank meeting. And one of this is the minister talking about loan restructuring and all of this, of course, to try and minimize the impact of all of these global issues on Nigeria. Do you think that is the way to go? Talking about restructuring some of our loans at this time?
Tulu, you can't be talking about restructuring your loan at the same time when you're going back to lenders to ask for additional borrowing. If you look at the 2023 proposed appropriation bill, the federal government has made provision for about 1.77 trillion naira that it will get from bilateral and multilateral partners. So that's obviously borrowing from either multilateral or bilateral agencies. So if you are talking of that, you can't be at the same time going to them and say, look, I can't pay you, I want to restructure. So that will send a wrong message. And of course, it will send a wrong message to the international financial market when that was mooted. I don't think we've gotten to the point where we need to restructure. Restructuring is a very negative thing when it comes to particularly national debt. But what we should do is to determine how do we grow our revenue so that the burden of debt service will reduce, or how do we minimize the level of where we're borrowing. We've come up with a budget that says we want to borrow 8.8 trillion naira at a time when you're meeting the idea of going to your lenders to restructure your loan. I think those are completely policies that are variant with each other, and we need to harmonize what we want to achieve. If you think you have a debt burden, you need to look at how to restructure your fiscal framework and minimize the level of your borrowing.
That is a good one. Growing our revenue here, let's stay on that, Mr. Johnson. We've seen a lot of efforts regarding taxation and all of the introductions by the FRS and even the VAT. Well, that was part of the Finance Act that we had accompanying the budget. But are we really moving from where we used to be with regards to revenue generation? IGR now, even for state governments, are they looking inwards?
Well, a few states are looking inwards. A few states have evolved a more effective tax management system, and they are obviously improving their tax revenue. But most other states still depend exclusively on federal allocations. But at the national level, I think we've seen growth in non-tax revenue of the government. Non-oil revenue of the government. So you've seen a growth in tax revenue of the government, but for that to really get to the point where it is sufficient to meet the funding needs of the country, the economy needs to expand. Part of the problem we have, there's a limit to which you can tax the few corporate entities that are paying taxes without killing them. What is missing is the growth in the size of the pie or in the size of the economy. But beyond that, there are also, when you talk of revenue, if you reduce your costs, you have also increased, in effect, your disposable income or resources available to you. And I think one of the things the government should do is look at those expenditures of the government is incurring today that are not absolutely necessary to run the country. One of which you have emphasized is the issue of subsidy. I think there's a provision for the first half of next year of more than about 3.6 or 3.7 trillion naira as subsidy payment. If you take out that, what do you have? Because remember that the subsidy is deducted as a first line item from federal government, federally collected revenue. So when you add that back, you realize that the revenue the government is actually earning will increase by about 3.6 trillion. I mean, the federally collected revenue, if you just eliminate that. For the full year, you're going to be talking of close to 7 trillion naira, and in effect, you are going to see a growth in revenue by that amount. And that could gradually begin to narrow the gap between government revenue and government expenditure.
Great stuff. But I want to go back to inflation and, of course, food prices. And I want to ask this question a little bit directly. What impact would this flooding that we see, we have farmlands being taken over in some states, and directly on food prices? I want you to explain that to us. Are we going to see a hike? Are we going to see a supply disruption? What would we see, Nigerians? Let's educate ourselves and understand the impact.
You're going to see a further short flood in supply. Basic thing that happened, rice. It's a product that takes it's a farm produce that takes up between 3 and 6 months to from the point of time of planting to the time of harvest. So and the rice farms have been disrupted at the mid of their season. So the issue of the planting is not possible now until you go to the next season. And what that means is that the quantity of rice that used to be produced here will not be produced in the current farming season or farming year. And we cannot effectively supplement that from imports. So you are going to see a major increase in the price of rice. And because of food, there's also substitution in food. So the demand, when people can't buy rice, they will increase their demand for tuber and other cereals. When that increases, the supply of tuber and other cereals may have also been negatively affected by the flood. So you are seeing flood cut down on average food production in the country without a replacement from either imports. Then you will certainly see material increase in the price of food items in the next couple of months.
Very interesting one there. Mr. Johnson Chukwu, before I let you go, projections, of course, are not looking too good. But at the end of the day, the minister still said that Nigeria would grow at 3.7%, I beg your pardon, for 2023. That looks to me like a tall order. With what we have on grounds and the fundamentals at the moment, moving to an election year, can we achieve this kind of growth around our GDP?
Well, looking at what we had, what we can see at this point in time, it might be an ambitious target. We all know, beyond the disruption we've seen in the farming regions of the country, we're still dealing with insecurity across the country. These are factors affecting production. We're still dealing with FX scarcity, which will affect the manufacturing sector. Now, the central bank has introduced tighter liquidity, which is making it difficult for banks to lend even to the real sector of the economy. So you're going to see a reduction in production or productivity in the real sector of the economy. Add to this is the fact that the first half of next year will largely be dominated by political activities. And then after that, the new government will have to evolve their own economic policies. So investors are going to stay on the sidelines to hazard a guess or to see what policies the new government will come up with. So before you begin to see investment in this economy, it will be probably the third quarter of next year. So with those prognoses, I think a 3.75% increase in GDP will be a tall order. The sector that could propel increase in GDP is agriculture sector, which is more than 22% of the GDP. Agriculture sector is likely to suffer next year because of the flooding we've witnessed this year. The other sector, the second largest contributor to the economy, is the telecommunication sector. That sector can grow. The trade sector, which is the third contributor to the economy, will suffer because of lack of effects. And oil and gas, oil sector, which is about the fifth sector after manufacturing. I've talked about what will happen to the manufacturing sector if you can access credit. That will also see a slowdown. The oil and gas sector is still smarting from the level of oil theft going on. We need to be able to determine whether the ongoing efforts to control the level of oil theft will bear fruit. Until that happens, the oil sector is actually the greatest laggard we've seen in the economy. It contracted by more than 11% in the second quarter of this year. So the outlook on key sectors of the economy is not looking very rosy. And like I said, this will be compounded by the fact that if people's attention or policy attention will shift from economic to politics, and there may not be any major political policy initiative that would drive any of the sectors of the economy that are critical for growth.
Mr. Johnson Chukwu, it's always a pleasure having you on the show. Thank you for helping us break down the figures from NBS and understand it better. Do enjoy the rest of your day, Group Chief Executive Officer, Cowry Asset Management Limited, Mr. Johnson Chukwu.
Thank you for having me.